Former President Trump's unexpected return to tariffs has sent shockwaves through the global market. These tariffs, announced just yesterday, signal a return to protectionist policies. This has sparked immediate concern among investors and businesses worldwide. The tariffs, which impose significant levies on a wide range of goods, have raised fears of a global trade war. The impact was immediate. Stock markets around the world plunged as investors reacted to the news. The Dow Jones Industrial Average plummeted over 1,200 points in futures trading. The S&P 500 is projected to open down 3%, a significant drop reflecting the market's unease. This instability highlights the deep concern surrounding Trump's aggressive trade moves. This sudden downturn serves as a stark reminder of the interconnectedness of the global economy. Trump's tariffs threaten to unravel the fragile balance of international trade. The consequences of this decision are far-reaching, with potential to impact businesses and consumers on a global scale. The shockwaves from Trump's tariffs reverberated across global markets. European markets witnessed sharp declines, mirroring the anxiety gripping investors worldwide. The FTSE 100 in the UK dropped 1.5%, while the German DAX plummeted by 2.2%. Asian markets also suffered, with Japan's Nikkei 225 plunging 2.77%, and Hong Kong's Hang Seng Index falling 1.52%. These declines highlight the global reach of Trump's policies. No corner of the financial world is immune to the ripple effects of these tariffs. The interconnectedness of the global economy means that actions taken in one country can have a domino effect on others. This interconnectedness is evident in the widespread market reaction. The swiftness and severity of the market response underscore the depth of concern surrounding these tariffs. Investors are clearly apprehensive about the potential for a protracted trade war. Such a conflict would disrupt global supply chains, increase costs for businesses and consumers, and could potentially derail global economic growth. Trump's tariffs are not created equal. They target specific industries, placing a heavier burden on some sectors more than others. China, a frequent target of Trump's trade policies, faces a hefty 54% tariff on goods imported to the US. Vietnam is hit with a 46% tariff, while the European Union faces a 20% levy. These targeted tariffs reflect Trump's strategy of using trade as a lever to advance his economic agenda. These tariffs have sent shockwaves through the affected industries. Major companies and sectors ranging from sportswear to luxury goods are bracing for impact. Lululemon, which sources 40% of its products from Vietnam, saw its stock plummet over 12%. Nike, with manufacturing in both China and Vietnam, experienced a 6 to 9% decline. Even tech giant Apple wasn't spared, dropping nearly 5% in after-hours trading. The automotive industry is also feeling the heat. Ford's stock dipped 2.3% while Volvo cars took a 9% hit. Shipping giant Maersk saw its stock plunge 7.4% as concerns mount over reduced global trade. These examples underscore the far-reaching consequences of Trump's tariffs, impacting businesses across various sectors and threatening their bottom lines. Economists and analysts warn of dire consequences from Trump's tariffs. Jay Hatfield of Infrastructure Capital Advisors predicts a potential U.S. recession, citing the tariffs' inflationary impact on consumer spending. George Saravelos of Deutsche Bank Research expresses concerns about the damage to the Trump administration's policy credibility. He argues that these sudden tariffs introduce uncertainty and instability into the global market. Others, like Art Hogan, point to the unexpected harshness and complexity of the tariffs as a key driver of market decline. The lack of clarity and predictability surrounding these trade policies makes it difficult for businesses to plan and invest, further fueling market anxiety. Sam Stovall warns of a potential S&P 500 correction, signaling a broader market downturn. The consensus is clear. Trump's tariffs pose a significant risk to global economic stability. They threaten to stifle international trade, increase costs for businesses and consumers, and could potentially trigger a recession. These tariffs mark a dangerous shift towards protectionism, a move that could have lasting negative consequences for the global economy.